Breaking news tonight from Houston. Texas is facing the worst auto repossession crisis in over a decade. Thousands of families are losing their vehicles, and dealerships are turning into parking lots of broken dreams.
These trucks were once worth $60,000. Today they're being sold off for barely half that. Dealers can't move them, lenders are panicking, and Texas, the land of trucks, is facing an extinction event for car ownership. In yards like this, you can feel the...
Texas just hit a repossession rate of 8.7% in the first quarter of 2026. That's the highest number we've seen in 15 years. Dealerships across Houston, Dallas, and San Antonio are being flooded with repossessed vehicles. And here's the kicker: pickup truck prices, the backbone of the Texas automotive market, well, they've absolutely cratered by as much as 32% in just 8 months. Now, I'm talking about F-150s sitting on lots for 180 days, Silverados being auctioned off for $15,000 below book value, and Ram trucks? Well, dealers can't give them away fast enough. This isn't just a market correction, folks. This is an extinction-level event for Texas car ownership as we know it. Lenders are quietly admitting they're facing the worst default crisis since 2008. Auction houses are running out of physical space to store repossessed vehicles. And if you financed a vehicle in Texas in the last 3 years, well, you need to hear what I'm about to tell you because your equity just evaporated overnight. So, buckle up because in today's video, we're diving deep into the Texas auto repossession crisis, why it's happening, who's getting absolutely destroyed, and what it means for anyone thinking about buying or selling a vehicle in 2026. But before we get into the absolute carnage, make sure you smash that like button and subscribe so you don't miss the next video where we expose which lenders are about to collapse under the weight of these defaults. Trust me, you'll want to know. Now, let's dive straight in. So let's talk about just how catastrophic this situation really is. In January 2026 alone, Texas saw 47,000 vehicle repossessions. That's 47,000 families who lost their primary transportation in a single month. By March, that number had climbed to 53,000. We're talking about 147,000 repossessions in just the first quarter of 2026. Now, to put that into perspective, during the entire year of 2019, Texas averaged about 380,000 repossessions for the whole year. We're on track to hit 600,000 by the end of 2026. That's a 58% increase, and frankly, it's absolutely unprecedented. But here's where it gets really disturbing. The average loan balance on these repossessed vehicles is $40,800, and the average amount still owed after the vehicle is auctioned off, well, that's $18,300. So these aren't just repossessions. These are financial death sentences for hundreds of thousands of Texas families who will spend the next decade paying off vehicles they no longer own. Now, pickup trucks represent 64% of all repossessions in Texas. And that makes sense because, well, Texas is truck country. But what doesn't make sense is how quickly the values have collapsed. A 2023 Ford F-150 XLT that sold for $58,000 new is now being auctioned off at dealer-only sales for $32,000. That's a $26,000 loss in just 3 years. Chevrolet Silverado 1500s, they're down 29% from their 2024 peak values. Ram 1500s have lost 32% of their value since last summer. And the GMC Sierra, well, it's following the exact same trajectory. Dealers are sitting on 90-day supplies of used trucks, and that number is growing every single week. But wait, it gets worse. The average days to turn for a used pickup truck in Texas has exploded from 42 days in 2024 to 127 days in early 2026. Dealers are paying interest on flooring loans for vehicles that aren't moving. And when they finally do sell, well, they're taking losses of $4,000 to $8,000 per unit just to clear inventory. So how did we get here? Well, it's not just one factor. It's a perfect storm of economic disasters that all hit Texas at exactly the same time. Let me break down the 5 catastrophic factors that created this crisis. Factor number 1, interest rate shock. See, back in 2021 and 2022, you could finance a pickup truck at 2.9% or even 0% APR. Dealers were practically giving money away. But by late 2024, the average auto loan rate in Texas hit 8.7% for new vehicles and 12.4% for used vehicles. Now, for someone financing a $55,000 truck over 72 months, that rate difference adds $387 to their monthly payment. For families already stretched thin, well, that's the difference between making payments and defaulting. Factor number 2, payment terms got absolutely insane. The average auto loan term in Texas reached 76 months in 2025. That's over 6 years. And here's the really terrifying part. 23% of all auto loans in Texas now extend to 84 months. That's 7 years of payments on a depreciating asset. People are still making payments on trucks that are mechanically worn out, need major repairs, and are worth less than half what they owe. Factor number 3, the oil and gas sector collapsed. Now, Texas's economy runs on energy, And when oil prices crashed from $94 a barrel in mid-2024 to $61 by early 2026, well, the ripple effects were devastating. The Permian Basin alone lost 38,000 jobs. Houston's energy corridor shed another 22,000 positions. And these weren't minimum wage jobs. These were $75,000 to $120,000 a year positions with full benefits. When those workers lost their jobs, their $850 truck payments became impossible overnight. Factor number 4, insurance costs went absolutely ballistic. The average full coverage auto insurance premium in Texas increased by 47% between 2023 and 2026. For pickup truck owners, it's even worse. A 35-year-old male in Houston with a clean driving record now pays an average of $3,240 a year to insure a 2024 F-150. That's $270 a month just for insurance. Add that to a $750 payment and $200 in fuel, and you're looking at $220 a month just to own a truck. For someone making $65,000 a year, well, that's financially unsustainable. And factor number 5, negative equity became the norm. By the end of 2025, 38% of all trade-ins in Texas involved negative equity. The average amount upside down was $7,800, but dealers kept rolling that negative equity into new loans, creating a debt spiral that could only end one way: in repossession. People were financing $65,000 trucks while only receiving $45,000 in actual vehicle value. The rest was just buried debt from their previous vehicle. Now, let's talk about what's happening on the dealer side because, well, it's an absolute bloodbath. Texas has 147 franchised new car dealerships and approximately 4,200 independent used car lots. And right now, hundreds of them are on the verge of bankruptcy. See, dealerships make money on volume and financing, but when repossessions flood the market with cheap inventory, new car sales collapse. Why would someone pay $58,000 for a new F-150 when they can buy a 2-year-old Repo with 32,000 miles for $34,000? They wouldn't, and they're not. New vehicle sales in Texas dropped 23% in the first quarter of 2026 compared to the same period in 2024. But used vehicle sales, well, they're down 14% too. Why? Because even repo vehicles aren't selling. The market is completely saturated. Dealers are running out of physical lot space to store inventory. Some Houston area dealers have resorted to renting empty parking lots just to house their overflow inventory. And here's where it gets really ugly. Dealers are stuck between two terrible options. Option 1, hold on to inventory, pay flooring interest, and hope the market recovers. But every month they hold a vehicle, they're paying $400 to $600 in interest on their credit line. Option 2, dump inventory at auction and take massive losses just to free up capital. Most dealers are choosing option 2, which is why auction prices have collapsed. Manheim's Texas Index, which tracks wholesale vehicle values, dropped 18 points in just the first 3 months of 2026. That represents billions of dollars in lost dealer equity. Small independent dealers are getting absolutely annihilated. These are the buy here, pay here lots that financed customers with bad credit. They charged 18% to 24% interest and made their money on defaults and repossessions. But now they're repossessing vehicles they can't sell and losing money on every single unit. Industry sources estimate that 30% of independent dealers in Texas will close by the end of 2026. Even the big franchised dealers are struggling. 3 major dealer groups in Texas have quietly laid off 15% to 22% of their sales staff. Service departments are the only profit centers keeping some dealerships alive. But when people can't afford their payments, well, they're not bringing their vehicles in for $800 service appointments either. Now, if you think dealers have it bad, wait until you hear what's happening to lenders. Because the financial institutions that financed all these vehicles, well, they're staring down the barrel of the worst default crisis in modern history. See, here's how auto lending works. Banks and credit unions originate loans, but they often sell those loans to larger financial institutions or securitize them into bonds. The problem is that everyone assumed Texas's strong economy would continue indefinitely. They underwrote loans based on optimistic employment projections and vehicle values that, well, they assumed would remain stable. Both of those assumptions were catastrophically wrong. Ally Financial, one of the largest auto lenders in America, reported that their Texas portfolio delinquency rate hit 9.2% in Q1 2026. That's more than double their national average. Santander Consumer USA, which specializes in subprime auto loans, well, their Texas delinquency rate reached 14.7%. Capital One Auto Finance is sitting on $2.3 billion in Texas auto loans, and internal documents leaked to financial analysts show that they're expecting losses of $340 million on that portfolio. But here's the real nightmare scenario. These loans were packaged into securities and sold to pension funds, insurance companies, and foreign investors. Those securities were rated based on assumptions that are no longer valid. When the rating agencies downgrade these securities, and they will, it will trigger a cascade of forced selling that could destabilize the entire auto lending market. Credit unions in Texas are getting hammered too. The Texas Credit Union League reported that average loan delinquencies across member institutions reached 6.8% in early 2026, the highest level since 2010. Smaller credit unions that concentrated their lending in oil-dependent regions like Midland and Odessa are facing existential threats. 2 credit unions in West Texas have already been placed under regulatory supervision. And get this, lenders are now offering loan modifications and extensions just to avoid repossessions. Why? Because when they repossess a vehicle and auction it off, they're losing an average of $1,800 per unit after accounting for auction fees, transportation costs, and reconditioning. It's actually cheaper for them to extend the loan term and hope the borrower eventually recovers financially. But that strategy only works if borrowers can eventually afford the payments. And right now, well, there's no evidence that's going to happen anytime soon. So let's talk about the human cost, because behind every repossession statistic is a real person whose life is being turned upside down. The typical Texas repo victim in 2026 looks like this. They're between 28 and 45 years old. They financed a vehicle between 2022 and 2024 when rates were low and values were high. They work in construction, energy, hospitality, or retail, and they are now facing a choice between making their truck payment or paying for groceries, utilities, or rent. Young families are getting absolutely crushed. A 32-year-old construction worker in Fort Worth financed a $62,000 Ram, $1,500 in 2023, with $3,000 down and a 72-month loan at 4.9%. His payment was $827 a month. He lost his job in January 2026 when his contractor lost 3 major projects. He missed 2 payments, and the truck was repossessed in March. At auction, it sold for $34,000. After fees, the lender recovered $3,100. He still owes $23,400 on a truck he no longer has. His credit score dropped 180 points, and he can't get financing for another vehicle. Now he's taking the bus 2 hours each way to a new job that pays $18,000 less than his previous position. That story is being repeated tens of thousands of times across Texas, right? Single mothers are being devastated. A 38-year-old nurse in San Antonio financed a used Chevy Tahoe in 2024 for $48,000. She needed the space for her 3 kids. Her payment was $680 a month. When her hospital cut overtime hours, she fell behind. The Tahoe was repossessed. It sold at auction for $28,000. She owes $14,800 on a vehicle she doesn't have, and now she's borrowing her mother's 2012 Honda Civic to get to work. Retirees who thought they were financially secure are losing vehicles too. A 67-year-old retired teacher in Corpus Christi financed a new F-150 in 2023, thinking his pension would cover the $700 to $20 monthly payment. But when property taxes increased by $340 a month and his prescription costs doubled, he couldn't make the payment anymore. His truck was repossessed, and he's now driving a 1998 Toyota Camry with 240,000 miles that breaks down constantly. These aren't irresponsible people. These are hardworking Texans who made reasonable financial decisions based on the economic conditions. The problem is that the economic conditions changed catastrophically, and they were left holding the bag. Now, this crisis isn't just affecting people who financed vehicles. The ripple effects are spreading throughout the entire Texas economy in ways that most people don't even realize yet. Employment is collapsing. Dealerships are laying off sales staff, finance managers, and service technicians. Auto parts stores are seeing sales decline because people are deferring maintenance. Detail shops, window tinting businesses, and aftermarket accessory retailers are all reporting revenue drops of 30% to 50%. Tow truck operators who specialize in repossessions are actually doing well, but that's the only bright spot in the entire automotive services sector. Tax revenue is plummeting. Texas doesn't have a state income tax, so the state relies heavily on sales tax revenue. When auto sales collapse, well, so does tax revenue. The Texas Comptroller's Office reported that sales tax revenue from auto sales dropped $780 million in Q1 2026 compared to Q1 2024. That's money that won't be available for schools, roads, or public services. Credit scores are being destroyed. The average credit score in Texas dropped 31 points between January 2025 and March 2026. That's the largest single-year decline ever recorded. When credit scores drop, people can't qualify for mortgages, credit cards, or even apartment rentals. This creates a secondary economic crisis that will take years to resolve. Consumer spending is evaporating. When someone loses their vehicle and still owes $18,000 on it, they stop spending money on everything else. Restaurant sales are down. Retail spending is down. Entertainment spending is down. The entire Texas economy is contracting because hundreds of thousands of families are financially devastated. And here's the really scary part. This is just the loans that were originated in 2023 and 2024 with 72 to 84-month terms won't reach their peak default rates until late 2026 and into 2020. We're only in the early stages of this crisis. The worst is still ahead. So what happens next? Well, buckle up because the forecast is grim. Industry analysts are predicting that repossession rates will continue climbing through the end of 2026. Some estimates suggest we could see 650,000 to 700,000 repossessions in Texas alone by year's end. Pickup truck values will continue declining. The glut of repo inventory will keep prices suppressed for at least 18 to 24 months. If you're planning to sell a truck in 2026, well, prepare to take a massive loss. If you're thinking about buying one, wait until late 2026 or early 2027 when prices bottom out. Lenders will tighten credit standards dramatically. The days of 84-month loans to subprime borrowers are over. Expect down payment requirements to increase from 10% to 20% or even 25%. Expect interest rates to remain elevated even if the Federal Reserve cuts rates. Lenders are pricing in the risk of future defaults, and that risk premium isn't going away anytime soon. More dealers will close. Industry insiders predict that 200 to 300 independent dealers in Texas will shut down by the end of 2026. Even some franchise dealers in smaller markets will close or consolidate. If you're planning to buy a vehicle, make sure the dealer you're working with will still be in business to honor warranties and service commitments. The political fallout will be significant. Texas legislators are already facing pressure to do something about the crisis. Expect proposals for stricter lending regulations, loan term limits, and consumer protection laws. Whether any of those proposals actually pass, well, that's another question entirely. So here's the bottom line. The Texas auto repossession crisis of 2026 is the worst we've seen in 15 years, and it's not over yet. Hundreds of thousands of families are losing their vehicles. Dealers are drowning in inventory they can't sell. Lenders are facing billions, and the entire Texas economy is feeling the pain. If you currently have a vehicle loan in Texas, make your payments the absolute top priority. If you're thinking about buying a vehicle, wait until late 2026 when prices hit bottom. And if you're in the market for a pickup truck, well, you're about to have more options at lower prices than you've seen in a decade. But you'll also be buying into a market where values could continue declining for years. This isn't just an auto crisis. This is a full-blown economic disaster that will reshape Texas's automotive landscape for the next decade. The collapse isn't coming. It's already here. So what do you think? Are you affected by this crisis? Let me know in the comments below. And don't forget to subscribe and hit that like button because the next domino is about to fall, and you'll want to know about it before it's too late. Take care, my fellow Texans, and I'll see you in the next one.